Things that now cost more than oil. Well, we got this cup of green tea right here. We have this red apple. We have this pen. And we have this random Blue Jays statue. Hey, what's up, guys? So, when I made this meme, I meant it as a joke, but I didn't think that you guys would actually take it seriously. But I guess now that you guys are taking it seriously, so whoops. On this channel, I usually don't talk about commodities like oil and whatever, but I've just been getting so many requests of people asking me, what do I think of this situation? What do I think happened? That I just had to make a video on this. So, in case you've been living under a rock today and you have absolutely no idea what happened, well, let me clue you in. So, oil prices have turned negative for the first time, or rather, more precisely, I should say that oil futures have turned negative for the first time ever. Now, this is significant because negative prices kind of wonky, right? It doesn't really make sense because if you think about it, why would someone pay you to give you stuff? So that's essentially what's going on. So negative prices just means that people are willing to pay to give you stuff. In this case, it would be oil. So yeah, the purpose of this video is just to share what I think of the situation and what could potentially be a way to benefit from this. So what could be a potential way for you to profit, knowing that oil prices are probably unsustainably low right now and they can't go down forever. And certainly oil prices are not going to be negative forever. That just doesn't make sense, right? So imagine that if oil prices are just negative from now on forever, it just wouldn't make sense. So I think at the lowest point today, the futures that expire on May 20th actually ended up at negative 30 something dollars. I think it was $35 or $36. And that's crazy, right? So people are going to pay you $35 per barrel of oil for you to take it off their hands. So it's so worthless that they're willing to pay you to get rid of it. So just a little disclaimer before we begin. If I'm being honest with you, commodities are a field that's a little bit beyond my skills and beyond my expertise. So if you've been watching this channel for a while, you know that my field of expertise mostly revolve around stocks. But I'll try to explain the situation at hand and try to explain it to the best of my ability. So here we go. And just a thing of note, I know a lot of people are like, wait, negative oil prices? Does this mean that I can just show up at a refinery and they'll pay me to give me a barrel of oil? No, that's not how it works, by the way. Like, this is not, you can't just show up at a refinery and expect someone to give you a free barrel of oil or even pay you to give you a barrel of oil. Theoretically, that's sort of what's going on, but it's not that you can just show up and get one. So, it doesn't work that way. So before you can try to understand what happened, you got to know what a future is. No, I'm not talking about that future. I'm talking about future as in the type of contract. So what a future is an agreement or a contract between two parties to buy a certain commodity or a certain product by a certain time. Once they expire, that person has to redeem and accept the delivery of that product. So for example, for oil futures, you're obligated to redeem the oil at a certain date. So for example, if you hold the May 20th futures, which are the futures that we're talking about in this video, if you hold them, then you're obligated to receive the delivery of oil on May 20th. Now, if you're wondering why futures exist in the first place, it's because it allows people to sell things that they don't have yet. So imagine if you're a farmer, right? You're growing, let's say, wheat, and then you're trying to sell the wheat, but you don't have the wheat yet because you can't harvest until the fall. Well, with a future contract, you can actually promise away the wheat that you don't yet have until the fall for the following year, and you can sell it now. So let's say if you need money now and you won't get money until you harvest the wheat and sell it, then you can just sell future contracts on your wheat further on down the line, and then you can get your money now. So yeah, in a nutshell, what you have to understand is that futures allow you to trade things that you don't have yet. That's the name of the game. Now, the problem with oil futures these days is that there's just no demand for oil these days, right? So I'm sure you guys know the situation at hand. Everything's on lockdown. There's no cruises. There's no air travel. There's nobody even driving because everyone's working from home. So the demand for oil has plummeted. And this comes at a really bad time because countries like Saudi Arabia and Russia are trying to price each other out of the game by continuing to increase production and lowering prices. So you have this massive oversupply and not enough demand, and this causes oil prices to crash repeatedly. And the reason why oil prices crashed so much today, again, as we said, we're talking about the May 20th futures, right? So the thing about the May 20th futures is that they actually expire on Tuesday. So it's actually a day before they expire. So everyone's trying to get out of these contracts because remember, you're obligated to receive the delivery for the oil if you hold the contracts, which means that a lot of these futures, they're being traded in the public markets by bankers or by people who actually don't have an intention of actually receiving the delivery for the oil. So if you're a banker, let's say, and you just bought into the futures thinking that oil prices are going to skyrocket in the future. In the first place, you were thinking about trying to sell this future to someone else for a higher price. Now, when it turns out that you actually couldn't do that and you're stuck with the future, well, then you're kind of screwed. Right? And this is because the future requires you to redeem a certain amount of oil. Now, if you're an investment banker and you have to redeem like 10,000 barrels of oil, where are you going to put the oil, right? You have nowhere to put it. You can't redeem 10,000 barrels of oil because you don't have the trucks to ship it and you don't have the pipelines and you don't have a place to put it. So you have to get rid of it. And that triggers panic selling, right? Because a lot of people are like this and they all want to get rid of their futures. And nobody who actually needs to use this oil are buying the futures because it's an oversupply situation, right? There's too much supply. So everyone who actually would need the futures, would need the oil, they already have oil saved up in their tanks and their tanks are almost full. And all we have is these people that are trying to get rid of the futures and they're just panic selling. And some of them are even willing to pay a premium to pay somebody to get rid of this, to take this future away from him so that they don't have to receive the oil. So if you're still unclear as to how this works, let me give you an analogy. So imagine if someone wanted to give you 10,000 laptops, right? And you go, oh, that's great. I get 10,000 laptops for free. And then the person goes, well, yes. And then you go, well, where am I going to put 10,000 laptops, right? Can I just take maybe one laptop? And then that person goes, no, you have to take 10,000 laptops or you don't get anything. And then you go, well, if I were to take 10,000 laptops, there's not enough room in my house to store them. So I'm going to have to rent out in a warehouse. So even if I get them all for free, then that might not be worth it for me. And then the seller of the laptop, if they wanted to get rid of the laptops bad enough, they'll be like, look, I'm going to pay you so that you can have money to go rent a warehouse to store the laptops because I really don't want these laptops. And then you go, well, okay, you're going to have to pay me a high premium because a warehouse space is expensive these days and I have no room in my house. And even though it's great that I'm getting 10,000 laptops essentially for free, but I'm going to have to spend money to store them. So you're going to have to pay me to give me the laptops. So that's sort of an analogy as to how this works, except it's not completely the same because laptops are not really like a perishable good. And oil, you can store it for quite a while too. But I assume oil has a shelf life, right? Once you pump it out of the ground, you can't just store it indefinitely forever. Eventually, I think it will go bad. But anyways, that's sort of a similar situation if you want to think about what's going on. And this is not to say that oil prices will be negative forever, right? So as I mentioned earlier, we're talking about the May 20th expiry future contracts now. Now, if you look further down the line into the future, if you look at June or July contracts or just contracts that expire later on in the year, you'll see that they're still positive. So I think the June contracts, last time I checked, they were trading for around $20 a barrel. So this just means that oil is still a valuable commodity. It's just that people don't want the oil now because it's all locked down and there's no air travel and there's no demand. But oil in the future will still be valuable, as evidenced by the future contracts still being positive after June 20th and beyond. Now, the next thing I want to talk about, and the thing that you guys are probably waiting on, is how to capitalize on this situation. Because we know that oil is unsustainably low, and we know that oil will eventually bounce back to higher levels. So I read somewhere that Saudi Arabia can be profitable if oil prices remain above $10 per barrel. So obviously they can't be profitable if oil prices are just close to zero or even negative, obviously, right? But Saudi Arabia is pretty much the lowest cost oil producer out there, and they can remain feasibly profitable at $10 $10 per barrel. Now for US companies, I think that for all these like shale companies, they will probably need oil to be closer to, you know, $40 or $50 per barrel in order to be profitable. But again, regardless of whether you believe that oil should be $40 or oil should be $10, it's pretty logical that oil cannot stay at negative prices or close to $0 per barrel forever. So we know that oil will eventually go back up. So how do we profit from this situation knowing that is the case? So a lot of people online I've seen are buying into this ETF called USO. So if you don't know what USO is, it's comprised of a bunch of oil future contracts, right? So I think they have a mixture of contracts that are expiring at different times. Now, this is not my favorite way to invest into oil just because of something called contango. And no, that is not a dance move. That's actually a phenomenon that I won't get into detail in this video because it's a little bit complicated to explain and is just beyond the scope of this course. But essentially, in a nutshell, it means that the price of the ETF and the futures are going to be off from the spot price of oil. So the spot price is just like the current price. And if you buy into USO, that means you're holding the futures and you're actually paying a premium to own the oil futures. So yeah, again, it's a little bit complicated. I'll put up a graphic as to how this works, and you guys can. I'll link down to the Wikipedia article and everything. You guys can read up on it on your own time. But essentially, the point is that, in my opinion, USO is not the best way to own oil just because of contango. So if we don't buy into USO, what can we do? So I mean, I'm not the biggest expert on commodities, so you're probably asking the wrong person if you're asking when's the best time to buy oil. If you're asking me, but in my opinion, I'll say this: maybe it could be a good play to buy into big oil companies that actually, you know, produce and refine the oil. So I know that it's not just based off of crude prices alone, right? So a lot of these companies, they have operations in refining and stuff like that. So if you buy their stock, you're getting into those fields as well. But I'm talking about companies like ExxonMobil or Chevron or BP or Royal Dutch Shell. And if you buy into like a small refinery or these small oil companies, they could very well go bankrupt and you could lose everything and get completely wiped out, right? So I think it's just not worth it to risk buying all these small oil companies. But I think for big companies like ExxonMobil, I don't really see them going bankrupt even if oil prices go really low like it did today. But again, please do your own research. This is not financial advice. I am not a financial advisor. This is for education and entertainment purposes only. So don't blame me if you lose money, and yeah, don't sue me. So in conclusion, for me personally, I'll be looking at these big oil companies very closely for the coming few weeks, and maybe I'll consider picking up some shares if the price drops low enough. As I said, my expertise lies in stocks, so I always tend to go back into stocks, even during these big oil crashes. I don't really feel comfortable messing with these like futures and stuff like that, just because I know that if you want to buy futures yourself, the minimum buy-in is like very huge, and I don't think RBC Direct Investing even lets me buy futures. So again, I don't want to mess with futures themselves personally, and I don't want to mess with like the commodity by itself. But I think that it could be a very interesting play to potentially pick up some shares in these big oil companies. So yeah, let me know down in the comments what you're doing. Are you buying USO, or are you buying these big oil companies, or are you buying just anything else to do with oil? I'd love to know what you think. Don't forget to give this video a like if you enjoy the content, and consider subscribing if you like this series. Be sure to follow me on Twitter and Instagram. I'll leave the links down below as always. Thanks for watching, guys. I'll see you guys in the next video. Bye-bye.